Warning, this is all financial advice. You can invest in any way that will make you feel comfortable. This is just a full breakdown of the stock to help you invest into a company that will help you grow your portfolio for the long term. Thank you.
It's time to hone your skills. You'll certainly need it.
Hello guys, my name is Kool-Aid Man 100X. Welcome to Black Money. How you guys doing? Okay, black people, listen. What we're going to be reviewing today and a full breakdown of is Google. So I know a lot of people have been talking about this company for a long time, so I actually want to dig into my paws and get to see what's under the hood. So this is a big feat for us. So we're going to be jumping into it a little bit more deeper. So let's get into it. Listen, black people, let's go and review Google. So the first thing we want to do is look at the chart. We always look between the 6 months, 1 year, 5 or max. So we're going to look at the details of what it gave us within these 6 months. So we can see within the 6 months, it gave us a nice price total of a volume of 53 million, which is crazy, and 4.10 increase. Then they took a dip right here with this 287. 44 million volume, which is crazy. 72 million volume went up to 384, and they kind of stagnant right here at a negative 4.99 with 53 million value. So Google been taking pretty amount of hits lately, which is crazy. So let's look at the year here. So you can see here they went up for the 230, they went up to the 318 with the 85 million volume. We went back down to 287. Then you can see here within that year, a 384 with a 72 million volume and a 53 million volume as well. Interesting. So let's look at the 5-year gap. So, well, we already know these numbers here. So they took a big hit here. As you see, this was their lowest hit there, the 97. So within 5 years, they actually peaked at 385 with a 194 million volume. So if you look at the full max here, we can see the key opponents here. They actually peaked at 385, which gives them 194 million volume, which took them plus 40%, which is decent, I have to say. So that's not bad at all for the charts that it's giving us. So yeah. So let's see if Google pays dividends. So as you see here, yes, Google does pay a company dividends. They actually did it in 2024, which they do quarterly dividends with an amount of 0.22 cent per share, which annually, which is 88 annually yield. So if we go on the docket here, we can see the type that they do. They do quarterly dividends. So anytime you invest in Google, you're going to be paid within a quarterly dividend with a year. So you're going to get it paid, which is 22, 21, 21. So they've been stagnant about 22, 21. So this is the highest within this year. So they actually increased their dividends by 1 cent. So, so if you're interested into $1 billion company, yeah, he's going to give you 22 cent quarterly, as you see here. So pretty stagnant with a growth 4.94. If you want to invest that, be my guest. But if you really want to and you want to invest $357.18, I really wouldn't compete with that at all. So let's look into the finances and look what's under the hood. So you already know what we do. We actually go into these financials or holdings or earnings and analyzation. So we really dig deep into what's going on. And my favorite is cash flow. I actually want to see what I'm investing in and see what I'm getting out of it. So the first thing we're going to be looking into is the net income. So 2025, they made 28.20 billion, which went up in 34.98 billion, which 34.46 billion. So they went down a little bit. And 2026 is their biggest year, $62.58 billion. So got enough cash to really circumvent what they're doing. Let's look at the cash from operations. So the cash from operations, 27.48. 52, 45. So they're actually profiting more in their net income and putting back into the company. Decent. Google know how to make their money. So that's pretty decent, I would say, if you really look at it that way. The change in inventory, well, they don't have any inventory. Everything is digital. Cash from investing. Let's look into that. Operation, cash from finance. And it's the difficult part here when you look at cash from investing, because they're in the negative straight across. So actually tell us the secret how this company is actually really ran behind the scenes. So if we go back to the profit margin in March of 2026, they actually made 62.58 billion, which they're in a negative of 63 billion. So this net come is not matching from the cash and investing. So they have nothing to invest. They spent all their investments. Literally, they're in the hole. They have nothing. So nothing they're investing. I don't even think they put their company up for collateral, which is crazy, by the way. I don't see why you even do that. The next one's going to be cash from financing. This is where you tell from a company that's actually putting more money into the company and financing other things. So this is interesting. 5.83 and a negative 1838 billion negative. Then cut it down to 703 positive. Then you back at 25.0 B positive. So decent, but billions, not good. But the billions is not good. I was to say that would be sustainable for financing, and depending on what are they financing, I'm thinking that they're financing more in office buildings or services or Yo, what's up, guys? This your boy Kool-Aid Man 100X. I want you to hit the link in the description below for my zero investment books. We have a quick sale going on for $7. Link will be in the description below or in the comments below as well, so you can get a chance to get the $7 deal and other things that you want to learn how to invest and take your investing to the next level. So I hope y'all enjoy. I'm gonna catch you guys there. That's another thing they can be financed, because you can finance servers or server buildings or server networks, stuff like that. So to run Google, I can imagine it's very optical. So it's a lot of money being put into these servers to run Google all over the world, if not in different countries. So you got to take that into being efficient with the money and time too. So when you really pay attention to it, you see the foreign exchange rate, you see millions negative. See what I'm saying? So they're actually running these servers in different countries to have different languages, to have different assertiveness, to have different pay walls and stuff like that. Because Google is just not Google. You can buy stuff on there. You can run virtual cards. It's pretty intensive. So I can see why they are putting money into financing and stuff like that. So that is, very telling. So let's look at the free cash. They're in the negative with the free cash. The first year, 14.2 billion, 5.6 billion, which is very low from your net profit. So all this money is being financed and they lost the investment. So, and not really having nothing, but unlevered cash is very negative. So somewhere in this, they're still in the negative. And that's a problem, because you don't want to be in the negative where you don't have unlevered cash, but you do have free cash to work with. So Google is actually, if I was to say, they're running at a loss. For me to actually say this for $1 billion company, where is this money actually going? To really run the servers backwards, you're really not profiting. Are you profiting off of ads? Or are you profiting off of running their ads through Google? Because you have to take into a tie on how YouTube is ran, because to me, they're trying to turn YouTube into Google to make Google attached to YouTube for the search engine. So that's when you say when certain videos are in the Google search, that's another thing, because it can be optimized for that. Like these videos is in Google search. So I can see why they're circumventing different avenues for people to go to Google search and find everything on YouTube. It's like their own video server, basically. So when you find something that you mean, the video pops up directly for it. So that's where AI use is coming into play for Google, because they're making everything more authentic and understanding where you can find that pure information from. So unlevered cash is really not good. So we already know they're running at a pure loss, which is crazy for Google. So we're going to the balance sheet. So, as far as inventory, they have any inventory, they run everything digitally. Total current assets. They got 166 billion. They have anything invested, but they asset. And so the reason why this is in the billions is because that was smart. They turned Google into their current asset. So they actually got shares of their own company, which was smart. Thank God y'all actually thought of that, because y'all are actually running at a low with the finances and stuff at a low too as well. So take that into consideration, Google. Keep buying your own stuff. Buy your own stocks is actually make smarter sense. Prepaid total expenses. Now, prepaid total expenses is very different because you have to see how much money they're actually putting into their company. But by them having the total assets, I don't really think so. Very interesting. They didn't show their prepaid expenses. Now you see this is being hidden. So this is a big number. If it's not here, I would expect Google to have a big number, but you forgot you actually got total current expenses. They did show this, which is 33.64 billion, 35.17, 36.48, 35.69. So if this is high, I can imagine these are in the 100 billions. So we already know the company is actually putting in a lot of money. I'm really thinking to run the server to actually compensate YouTube and Google at the whole expense of being the #1 search engine in the world. So yeah, it's a lot of money. That's why the prepaid expenses is not on there, and the total expenses is ridiculous high, and they will get higher. So this is just the base. I can imagine these jumping up even further. So be accrued to that when you invest in Google, because these expenses are going to get higher to run these servers because they're steady expanding. So have to take that into consideration as well. And certain countries don't want YouTube, and Google is attached to YouTube. And you see how that actually works into, Google favor, because man, they have to make sure it's accepted in both ways, because they're both connected. So that puts a hardship on having it in foreign countries, different rules they run in countries. So yeah, it's very difficult, very difficult. Total long-term assets. They actually got total long-term assets, which is Google, 14, 16, decent. 17 actually made it more positive. So Google is really what's making a long-term, because Google always going to be around. So it's always going to be actively used. So that's really, but, total assets, 5.2, really decent, 7.3 in assets. So yeah, they're buying their own company. Google is thriving. Everybody use Google. Everybody use the ads. Everybody run ads. It's attached, so that's very good. So just to take a glimpse of other things, I'm gonna start doing this in the video. Long-term debt. See how this debt accrues. This long-term debt, the leases that they lease these billions, which is really crazy. Your leasing terms is in the billions. That's crazy. Liabilities is in the hundreds. And you see, that's why you want to show the prepaid expenses, because Google is kicking out money. So if you really think about it, Google, I wouldn't be intimidated by Google because they're actually running in a total loss. Like their net is not even their true profit. I think their profit is just in the millions, because they have to pay so much to run these two systems, which is YouTube and Google, for these big optimal search engines to be combined into one. So it's very deep. So they're running at a loss. They're running at a loss, totally running at a loss. So take that into consideration. We're going to look at the earnings section. I actually want to see this, because by them running into a loss, they have to be in a positive. Yeah, I figured that. So they in the billions. This is crazy. They took a 20% low hit, which is crazy, because they actually took that in, I believe that was 2025, 2024 quarter. So that was probably about the pandemic. So, but 21% ain't really do anything, because right after that, they bumped right back up and made 90.3 billion. So still profiting as usual, but their profit is still running at a loss to run Google and YouTube combined. So this profit is getting cut in half. So I wouldn't even take the earnings seriously, but they profit well. They really do. So, it's not bad. It's just, they taking a big hit in those issues. So we're going to be looking at the key issues. The key issues is, we're going to be looking at the, bullish and the bullish review and the bearish view. I'm sorry. So, the Alphabet massive infrastructure spending at yielding margin results of the quarter 2026 surge, which is the year over year of 109.9. But that's why I said they just profiting. Like they just hit 100. They just got a billion because they're putting so much in it. Analysts at market stated of a loop capital raise of their price targets since the Gemini transaction and the AI build. So really, and that's another thing too. By them having all these AI tools that you can use for free, they're trying to come into that space to actually get people to use the tools that they actually created. So they're competing with that too. And that's why they offer their tools for free, because that'll attract more people to use the tools and make it more active for them to sell. So when they do get used to the tools and they do make, the sudden change of paying for a subscription, that's where they make their money too for the surge. But now they're competing. That's where the bears come into play. The scale of the AI infrastructure investment is visibly squeezing for free cash flow. See what I'm saying? Because they're offering free tools to attract the audience, because you got ChatGPT, you got DeepSeek. Oh my God, man. If you're a technical AI enthusiast and you're looking for full business results, DeepSeek is about the best one you can do. If you put an idea into DeepSeek and put it in the think mode or whatever, man, you can come up with some crazy stuff. Just letting you know. But the cash flow is raising and skeptical about near the terms of return despite raising the analyst price targets, and the stock has drifted roughly 9% below the recent peak. See what I'm saying? Reflecting the market unease over capital intensity and uncertain returns and timeline of these multi-billion-dollar commitments. So they put $1 billion some dollars, we don't know the exact number, into building these AI tools. And you mean to tell me people are still not using them and they're free? They're free. That's why they running at a loss. That's why I said, if you're looking at the net income of being at 63 billion, bro, cut that in half, if not 3/4 of a half. If not, I was saying the millions, because the money they put into the tools to attract these people to be the number one as far as being better than Meta, Apple, and all them stuff anyway. They don't have their own lane. They're competing in a lane they can't control, so that's why they're trying to offer these $1 billion companies, Anthropic and all them people, to, merge with us. We'll pay you, blah, blah, blah. And that's another thing too. They shell out so much money to these companies and data centers that to where they're not profiting what they're usually profiting for. So you have to take that as a loss as well. So that's another thing to take into consideration of what is being good and not good. So take that in consideration as well, I guess, if you want to. But we're going to look at the consensus, the average difference between the consensus of a buy, hold, or whatever. So I looked at the consensus here for the Google and the base rating of 33 analysts. If you see here, just the base model of 33 analysts covering the stock, buy 28%, which is 85%, hold is 15%, sell is 0. Why would you sell Google? It's Google. As far as an investor, you'll profit. As far as you working there, you will make money. As far as you being a CEO and the owner of a company, yeah, you're gonna get paid. Actually being the owner of Google, you're not profiting nothing. Investment wise, it's a risk, because you're putting $357.80, bro, and 3 stocks, you're at $1,000, and you're only profiting 80-cent dividend every year, quarterly. No. The best thing to do is invest into these ETFs, weekly, stuff like that for Google. They'll be around forever. I would invest into that, and you'll make your money weekly. So if you want to do that, I would suggest that. But just solely buying Google, if you ain't buy Google back then, there's no way you should be buying this right now. In case you just I want to own a stock of Google. Yeah, put $357. You'll own one stock of Google, which I believe is a very, very bad investment if you're just investing that much money and that little of a dividend. So be my guest if you want to do. This is just all advice. I hope you enjoyed the video. I'm going to catch you guys on the next one.